This week we're going to talk about the top 10 FHA myths.
Sounds good.
Hello everybody, my name is Barry Horvath and this is Moving Forward TV with your local market update.
And I am DeLynn Gaston. Thank you so much for joining us again on our 347th episode.
Isn't that crazy?
Isn't that crazy? We've been bringing this show to you guys for the long time, many years.
For 100 years.
I know. It feels like that sometimes.
Yeah, I know. We've been through the good times, the bad times.
And the bad times, the good, the bad, and the ugly, as they say, bringing educational material, keeping you guys, the real estate professionals, updated on what's going on.
And our buyers. And just people who like to watch
right.
us because they think we're funny.
Some days we are.
Some days we're not.
Let's hope today is a good day.
Yeah, you know what's so funny? Someone asked me, they go, when do you tape your show, at morning or night? I said, well, it depends on the week. You know, sometimes we do morning, sometimes we do night. Lately, it's been morning. So I wanted to give them an aha moment. When we're drinking coffee, it's usually in the morning.
Oh, yes.
Yes, so this is coffee week, so.
Unless it's me, in which case, use
right.
him for that gauge because he's really good about drinking water in the afternoons, and I drink coffee
all
pretty
day
much
long.
any hours.
You know
Do
what?
you like my cup, though? This is my Star Wars cup.
Oh, that's beautiful.
Look at that.
Beautiful.
See?
All right, we're educating people on our cups.
On Star Wars, Mandalorian.
Actually,
very good cup.
if it's an iced coffee, there's a possibility it's an
that's
afternoon
true.
taping.
That is
so
true.
we all know you watch us at night. Sometimes when you can't sleep at night and you need a good rest, you put us on to help you sleep. I've been told that too. They're like, our shows aren't that long. So.
I know. Or that boring. Well, we hope not anyway.
Actually,
we try and keep them fun because let's face it, mortgages is not.
It's not a fun.
It's not an exciting thing. It's not like we're teaching people how to water ski or anything,
No,
you know?
No. But I have tried to watch our show before late at night when I can't sleep, and it does help me sleep because I'm like, I've seen this before. I know exactly what she's going to say. And it was really funny when she said it, but the third time I watched it, it's not that
It
great.
actually will stimulate my mind. I'm like, oh, I should have said this. Oh, I should have told them this. Oh, I should have told them this. It's like reading a self-help book right before you go to sleep.
Right.
You know, it's all the stuff that you're supposed to be learning. No, you got to read something that's totally boring before you go to sleep.
And for those of you who have watched 346 of our other episodes, you know that we are uncensored, uncut. We do it, we run.
We roll.
We roll. So if we make mistakes, they are real mistakes on the show. I just want to let you know that. So in case you didn't watch our 346 other episodes, now you know that. So this week we're going to talk about.
To expect.
Yeah, this week we're going to talk about something really exciting to you.
We try and bring to you guys things that come up in our everyday, right? So we do mortgages, it's no secret. and some of the stuff that comes up, some of the stuff that we see, we figure let us educate you guys about it. And we've either learned about it, something new, or something that, a lot of questions that come up, or a lot of, this week what we decided is a lot of myths. A lot of people think some things about FHA financing that just simply aren't
true. Oh my
true.
gosh, and it's so funny because there's a lot of people we deal with that have maybe been in the industry for years, and FHA is not what it used to be. It's different.
Yes.
It's a different loan. In fact, you know what? Back in the 2000s, there was subprime and FHA.
Yes.
And people went to the subprime loans. They went to the 228s, the 327s. Do you remember those?
Yes,
Which meant the
I do.
product was fixed for 2 years. And then for the next 28, it was an ARM. And the floor of the rate was actually the start rate on every one of those.
And most of those after 2 years went to 9% or 11% or something
yeah,
like
like
that.
they couldn't go down. So
Thus the real estate crash.
yeah, I mean it was.
And the foreclosure.
And people
boom.
are like, oh, I'll get my credit score up in 2 years. So,
Yeah.
so
But anyway,
Yeah,
FHA would have been the better option then.
yeah, but it seems so hard to do.
compared to those,
the subprime loans.
those subprime markets.
You know what? It was so funny. You do what we call the white sheet, and you'd run their credit. You'd fax over a pay stub, and you literally would have conditions that afternoon. You'd fax it in, and then
so
people.
Those are days gone by.
Yeah, that's not the way it is anymore. But FHA is, kind of it's not even a subprime loan, and we're going to give you the top 10 myths about it right now.
Yes.
So we'll be back right after this. Just kidding. We don't go to break.
I was just going to say, what are you doing? So we did want to touch on some of the myths, getting off of that subprime stuff. Some people call that the good old days. I don't.
Yes.
But anyway, so on to some of the myths. It's a great product. And yes, back during those days, and even before that, even before the mid-2000s and the real estate crash and such, as you know, I've been doing this 100 years, FHA used to be known as a more difficult program. Where the appraisers would come in and pick it apart, where it would cost more money and sellers more money.
Why don't you just give away all 10 of them right now? One sentence. All right.
It's not like that anywhere. So we're going to give you the top 10 in no particular order.
So, and everything that we tell you is based on what we have observed in the last week. It's so funny.
Yes.
Things come up. So the first myth to me, and I love this, is that FHA is for first-time home buyers. So if you're not a first-time home buyer, you're not going to get an FHA loan. Not true at all.
It's an anytime home buyer.
Yeah. In fact, you can use the loan anytime. You can. You could have owned a house, sold it. You can get an FHA loan. You can sell it. You can get another FHA loan. You can get as many FHA loans, one after another.
Right.
And we'll cover that later, as you want. So it is not just for first-time home buyers.
No, not at all.
And in fact, if you want to compare for the lowest down payment, I know we were going to discuss this, FHA versus conventional,
And what we're trying to do is open up some options to you, because I don't want people to think that, I don't want to go FHA, it's, whatever. FHA is an absolute great program, one of the best programs that is out there. We're limited, but definitely a great program. FHA, minimum down payment, 3.5%. Conventional loans, minimum down payment on the first-time homebuyer program only is 3%. Otherwise, it's 5%. So conventional requires a higher down payment, or if it is the 3%, a lot more hoops you have to jump through on those first-time homebuyer programs.
Yes, and you don't have to go through any counseling to get FHA. No first-time homebuyer class. They're not required whatsoever. Right. So that's a big deal for people on busy schedules and so forth. While we think everyone should get educated, if you really want to get educated, just watch us. We're that good.
We are. We're exciting. I know. And the camera's stuck on me again.
I know. You know
what? It keeps on getting stuck on me. Oh wait,
I think
that
the cameraman's got a thing for you. Earlier in the show, when he was putting my mic on, I thought it was me, but now that the camera is focused on you, it's clearly you.
Okay, maybe he does have a thing for me.
Boom, it flipped off quick, right? Gotta love it, gotta love it. So it is not just for first-time home buyers, and you can do 3.5% down, and closing costs on FHA, if you're doing low down, are actually much higher than a conventional loan.
Right.
You can do the seller can actually pay up to 6% of your closing costs.
FHA is definitely a lot more lenient on that than the conventional option is. And I always, give people both options. You can go this way or this way, and depending upon where they are from a financial standpoint, a lot of times FHA makes much more sense. So don't be afraid of it.
Next myth.
The second thing. And this has to do with COVID. So a couple of months ago, when COVID first started, yes, a lot of the...
Do you realize now we're into 6 months of this?
I can't believe that. Yeah, it is more than a couple months ago. Anyway, when COVID first started back in around March, when things started shutting down.
Hold on, time out.
We weren't going to mention
We had an agreement, we had a pact that we were not going to talk about COVID, because that's all people talk about is COVID.
I know.
You are forgiven. Go ahead.
Okay. So the mortgage investors started being very strict with what kind of investments they wanted to make into mortgage-backed securities, which of course is it's back on me.
It's back on you. Look how pretty you look today.
Is what
it's a good color.
Thank you.
It's the gaming chair that does it for you.
I know. I love this chair. Stop.
Sorry.
All right. So FHA, so they got very strict on which kind of loans. Lower down payment loans, the investors just got very strict on, and they started costing more. So people started thinking, oh my gosh, to get an FHA loan, I have to pay a whole bunch of points. And actually, back when, in the old days, back in the 90s or whatever, and it used to be that way as well. Not so much anymore. That is not. So things are kind of back together again.
Yeah, the FHA does not charge any additional points. That is a definite myth. There are no additional points up front. The only additional fee is the upfront MIP.
Right.
Which is your mortgage insurance premium that's going to protect the investor. And remember, this is a government guaranteed insured loan. So they charge an insurance premium to get you the rate you're going to get.
Absolutely.
So
now the thing I do want to say as far as the points go and such is keep in mind points and rates are a function of each other. So and a lot of the interest rates and such are based on credit score. So if they are lower credit scores, you might have to pay a point or something. But it doesn't have anything to do with the program. It would be whether it's conventional or whether it's FHA. It really has to do with every individual situation and credit and things like that.
Now, we had a realtor this week that said, my seller will not go FHA. It has to be conventional. And we had a buyer that was a well-qualified FHA buyer.
Right.
Now, we know, some of you may or may not know this, FHA is a little tighter on flips. We know that.
Right.
Like you need to have the property at least 90 days before you can go FHA. You can't go right into it. So that would be a reason to go conventional right there. But it does not cost the seller any more money to go FHA. Now, back in the, what do we want to call that? Back in the early 50s? I don't know when it was. I know how it was.
Okay, early 50s.
Let's go with the early 50s. There was a time, it might have been in the 70s or the 80s.
It was definitely before me because this person educated me, believe it or not, on that. He was an older realtor. And you know what? And I didn't know this.
And that just goes to prove you need to keep up with the industry. It was probably...
It had to be in the 70s.
So they did used to charge an additional fee to the seller. That is not true. It's not been true. So if you've got a contract that's FHA, that doesn't necessarily, it's not going to cost your seller any more money. So don't be afraid of it. So keep that in mind, okay? Right. That's our tip number 3. What's number 4, DeLynn?
FHA is stricter. That is not true either. Somebody had mentioned to me, I think it's too hard to get an FHA loan. No, it's actually not. So FHA is actually a lot more lenient in a number of areas. Keep in mind, both conventional and FHA, they want a 2-year work history, right? All of you know that. Everyone is, not necessarily on the same job, but in the same line of work, and that's with either one of them. But FHA is definitely more lenient on debt to income ratio.
Yes.
And on, as we said a little bit earlier, paying closing costs. FHA allows, on these smaller down payment loans, allows the seller to help you with more closing costs than conventional.
Which will let you get into a house for less money.
Right.
At a very favorable rate, I might add.
And the interest rates.
Oh my gosh.
And it's not even on our list, but the interest rates on FHA are always, because it is an insured loan by the government, always lower than conventional.
Yeah. So we'll talk about that on one of our other tips coming up, DeLynn.
Yes. Actually, I don't even think we have rates on here.
Well, we talked about, it's actually one coming up. It's only for FHA for people with credit challenges.
Go. Okay.
So I'll segue into that.
It's the next one.
It is the next one. So you know what? We have a buyer right now with a 696 credit score. That's a good score.
Right.
Over a 680, you would think it's good. Well, I won't blame COVID, but since DeLynn talked about COVID, things have changed.
She already opened up that box.
She opened up Pandora's box. I'm going to jump in it with her, okay? So with a 696 score, putting 20% down, you would think that the rate would be great on a conventional. It's not. Even when you add the MI.
Right, the mortgage insurance, the PMI.
The PMI on that loan, it's way cheaper. I mean, his rate was in the upper 2s. On an FHA, on a conventional, he was going to be just over 4%.
Right, 4.25 or 4.8, something
somewhere
like that.
on there. So don't quote rates.
Right, I said something like that.
Be vague. 2s, 4s. That's all you give
Over for.
All right. There you go. We're just watching out for the compliance gods, that's all. But
And this is something that changes all the time too. So don't think that this is carved in stone or whatever. This is all based on secondary market. What is the market's buying? What are the investors who invest in mortgage-backed securities, what are they looking for? And that is what's going to swing your interest rates and such.
So this was a good buyer. So when you're listing a house, don't think, oh, I can't take FHA because it's not going to be a credit-worthy borrower. That's a prime example of
Perfect
why
example.
you want to go FHA on that
Right.
particular buyer.
Right.
Okay, what's next, DeLynn?
That it's going to cost the buyer more money. Again, another myth. We kind of covered that one already. But
Right.
no, it's not going to cost the buyer any more money, other than, like you very nicely explained, the upfront mortgage
Did you
insurance
just give me credit?
premium. I did, because you did a great job on that.
Wow. You know,
The upfront mortgage insurance, because it is an insurance. FHA does not make a loan. FHA does not make the loan. The lenders make the loan. FHA insures the loan.
They
and
guarantee
FHA
it.
is the Federal Housing Administration. They're guaranteeing it.
and again, with the people with those credit scores that are under 700, FHA may be a great option because
It
that
usually is.
PMI or the MI insurance may actually be less. FHA only has two rates, 0.85 and 0.80.
And
That's
what-
the factor.
the
meaning
factor used to come up with what the mortgage insurance.
conventional is like you shop it, it's all over the board based on down payment, based on credit score, based on property
hugely
zip
based
code.
on credit score.
Yes, so
And if you're under a 760 on that, it starts going up. Your
Yeah,
PMI that you're going to pay is going to be a lot higher if you are under a 760 credit score.
On
And it goes in
conventional.
20-point increments. So it can go up there pretty quickly.
So don't just look at rate, look at the whole picture, you know. FHA may be a great option for it. Okay,
On to the next one.
so here's another myth.
Oh,
You
yeah.
can only use FHA one time. So again, it's not for first-time
I
home
don't know where
buyers.
that one came from.
If you have an FHA loan, you sell that house, you can go get another FHA loan, okay? So you can use the program as many times as you want.
Actually, I think that's where it probably came from. People think that it's a
I already
first-time
used
home
it.
buyer program. I already used it.
I
I
already
can't
used
use
it.
it again.
No, you
Not
can-
true. You
you
can
can-
get several FHA
But
loans. You just
only-
can't get them at the same time.
Right, which is our next tip. You cannot have multiple FHA loans. There are exceptions to that rule, though, however, and we've proven it to be true because we're that good.
So what he means by that, so if you buy a house and you use FHA financing to buy that house, and then, you get married and you have 3 kids, and now this house is too small and you want to get another house, you're like, well, I already have my FHA on this house. Under certain circumstances, FHA will allow you to maybe rent that house out and get another house with an FHA loan under certain circumstances.
Right, like examples are you moved out of the house, your family grew.
What I
you
just
needed
said, yeah,
bigger,
family grew, you got 3 kids now.
You got 3 kids, but you must have equity in the current FHA.
Or, right.
25% actually, if you want to be
Or if you got relocated maybe, and you have to move from,
Yes. Yes.
FHA is strict on this too. It has to be 100 miles away. So if you're, working right now in the Tampa Bay area and you get relocated with your company down to Miami, you're going to be okay.
Yeah. So
If
let's
you
all
go,
let's all move to
if
Miami.
you're working in Tampa Bay and you get relocated to Orlando, believe it or not, that's like 97 miles.
Depending where in Tampa, has to be 100 miles. There's no leeway.
Has to be 100. There's no leeway. Has to be 100
So
miles.
whatever zip code you're in now, they're
Driveway
going,
to driveway.
driveway to driveway.
Driveway to
It's
driveway.
not, and it's is it as the crow flows, or is it the road?
It's the road.
Yeah. So
Yeah.
100 miles.
Yep.
Cut and dry. Interesting.
And I know that dearly because I had somebody who it was 96 miles. He went from, I want to say Brandon or something like that to Leesburg.
Right.
He got transferred. And it was like 96 miles or 97 miles, something like that.
And they couldn't do it.
And they couldn't do it.
Wow.
Isn't that something?
Wow. Yeah.
I was
Interesting.
surprised.
Okay, next. This is a biggie, and I've had this. FHA is for primary residence only. It can never, ever, ever, ever be used for an investment property. So if you're buying an investment property, you're looking to rent out, you cannot go FHA.
Nope.
So, I had somebody, but here's something you can do. If you buy a property FHA and then you live in it and you occupy it, and then all of a sudden you decide to upgrade your home and buy another home and you want to rent it out, you can actually leave the FHA loan on there. Nobody cares. But you cannot buy and close an FHA loan as an investment property. Point blank. Period. The end.
And I get, the question I get a lot, and I'm going to guess you do too, is how long
Nobody talks to me.
how long
They
do
all
I
talk
have
to you.
how long do I have to stay in
Because
it?
you're nicer than me.
Well, that part's not true.
Is there actually a hard rule about that?
They say 12 months,
Yeah.
but is it hard? Hard
There's
is
no
the
hard
questionable thing. So they do say 12 months that they would like to see you occupy that property before moving on into a rental property, turning
But
it into a
there's-
rental property or something.
There's no FHA police, though. There really
No.
isn't.
No,
So, but
there
you
isn't.
must close, you must occupy that residence. Don't commit fraud. Don't try to do it.
Right.
And if you have another house listed, because we're going to know about it, on your,
Yeah.
we're going to find your real estate you own. I don't care if it's in Michigan that you don't have a mortgage on. We will find it. I promise you, we will find out. So.
Whatever you do, don't try and keep things from your loan officer. Just share everything with them
Yes.
because you know what? With all of the fraud that happened in the past, they look at everything so closely and so carefully these days. So
All right.
just go on it.
All right.
And then
Now, this is my favorite.
10.
Number 10. Right.
it's probably
Can I use
really
it? Can I do it, or
loud.
do you want to do it?
No, you go for it.
Really?
Yeah.
I'm in?
You got it.
Hey,
you
Lightning
can
are
do
in round
this.
2 of the playoffs. Woohoo!
Yay!
I know you don't even know. I forgot to tell you. Yeah.
That's
I
fantastic.
had to Google it last night to find out. The game was like
crazy.
at 11 o'clock yesterday or something.
Oh, really?
Yeah, I'm like, what a perfect time for people who are busy like us.
We love our Lightning.
I know.
Go
So-
Bolts.
All right, so the number one myth of FHA is the appraisals are harder. All my appraiser friends are all going, yes, go Barry, go DeLynn. You guys rock. They are not harder. They are not. Stop it. Get off of it. Forget about it. They are not harder. Are they different? Yes. Here's the big difference. Safety. If there's safety issues, it's going to come up. If you got a house with peeling paint, that might come up. If you got
Wires hanging out of a ceiling fan that used to be there.
Yeah, cap it off. The appraisal's not going to be harder. Are there setback requirements on a well and septic? Yes. But other than that, it's a different report for the appraiser.
A few more pages.
Yes, but the appraiser's not going to be harder. They're not going to cut the value on it because it's an FHA.
No.
That is such a myth. And again, get your sellers off the boat that they only want to take in a conventional buyer. That's the point of it. So,
Unless it's a flip. Again, if
I
it's
get
a
it.
flip property, we get it. Then
and
you
the other
don't
one,
want to go
you know what I
FHA.
love? Oh, FHA won't pass the roof. If FHA isn't going to pass the roof, neither is conventional, folks. Hello? Wake
I
up.
know. I've been having lots of roofing things lately.
I know. It
And
doesn't matter if it's conventional or FHA. It's you got to have
I
some.
know, and it's funny when there was like foreclosed properties all over the place,
Right.
and their homes were just trashed, and they were just a mess. Guess what? Conventional had a problem with that
You're
too.
not. Yeah, it's got to be live-in conditioning. The floor covering stuff's going to come up.
Mm-hmm. But FHA, they're not as strict as people think. Well, they rip the floors out, so paint them. Just don't paint them concrete gray, but paint them.
Show there's some covering.
Right, something.
Yeah.
So there's definitely ways. Don't be, our basic point is don't be afraid of them anymore. They're really not that bad. They're not as bad as some of the myths and stuff that are out there. Hopefully we've been able to alleviate some of those concerns in your head about accepting an FHA contract or
Do it.
working
Take it.
with an FHA
Do
buyer.
it. Make sure they're with a
fine.
reputable lender who really pre-quals somebody. That's all I'm
Yeah.
saying. So there's
If you
nothing
don't, you're
wrong with
cutting off your own business.
All right, so let's talk about appraisals real quick because we only have another minute.
I know. So,
Since
and
we
we
talked
did that
about appraisals.
that way because we wanted to touch on the appraisal thing and everything. So on some of the things that we have been seeing, just so that you know, sometimes appraisals are coming in higher, sometimes appraisals are coming in lower. So Fannie and Freddie Mac on a conventional loan, there's something they've been doing lately, which is appraisal waivers, not on a government loan, not on a VA or not on an FHA, but on conventional loans. Sometimes, if the house is priced right, whether it's a purchase or whether it's a refinance, sometimes when we run everything through the system, if Fannie Mae or Freddie Mac agree with that purchase price of that property, they'll give us what's called an appraisal waiver, or a PAW, property inspection waiver, which means we don't need an appraisal at all on that property.
So it happens on...
It can happen.
It happens on
if it's priced
refinances,
right.
refinances, and purchases both. It used to be just on refinances. If you got lucky, you would get it. But I think...
And then it used to be on only if you were putting a whole bunch of money down. Guess what?
Now.
I got one with 5% down the other day. A young buyer, 5% down
Isn't
on a
that
conventional
awesome,
loan. And we didn't have,
and it's so funny.
It has to do with if the house is priced right.
Yes, yes. And I think it's property zip code too, a marketable area. You know, so yeah, it's great though. Nothing like telling your realtor, like, I haven't heard from anybody on getting the appraisal. We told you there was a PIW. When you say, what's a PIW? That's your inspection waiver. You don't need an appraisal. There's no, we don't.
Which
we don't
is
even
very
have,
nice.
We don't even have a fee for it. So how cool is that?
And then the only other thing I wanted to touch on appraisal is the subject to. So periodically when they do come back, if something is wrong, whether it's conventional or FHA, it's going to have to be done subject to, or if they make it subject to, the repairs have to be done ahead of time.
We're going to have one of our appraisers on as a guest
And
soon.
we'll talk more
and cover
about
it.
that
There's so much
subject
to
to.
cover on appraisals.
I know.
I mean, we need 38 shows just for that.
We do.
Yeah, so anyway, upcoming events. Wow, we got another Lunch and Learn coming on via Zoom, so come join us. It's on September 8th. It'll be at 11:30. It'll be a good one. It'll probably go till 1, so block up some time, but we'll have your West Pasco Board President, Mr. Mike Gallo, will be teaching you on social media. I know he's been on
Mike.
before for compliance.
He's a good
now he's
person.
just going to talk about social media marketing. You all need it. During this time, you're going to want to watch this show. Trust me.
very good
Just
about
tune
it.
in. It costs you nothing. It's just your time, and you can like mute your phone and do what you're doing. Just watch it. I'm telling you, if you get one tip taken away, it'll help you grow your business. So that's it for this week.
That's it. Good
Yeah.
job.
Yeah, great. We got through it.
Hopefully we helped you guys with
Something.
not being afraid of FHA anymore.
Yeah.
We appreciate you guys watching.
Share the show.
Like us. All of that. We are today and every day.
Moving forward.
See you next week.
Have
Bye-bye.
a great week, everybody.